Welcome back. So the markets are very, very range bound. There's not much moving, barring individual level stock action. So let's straight away take it to our next guest. Onkar, Raunak Onkar of Parak Parik Mutual Fund is with us now. Raunak, great to have you on, and it's been a pleasure really speaking to you through the year, right? We've tracked the markets ups and downs, and of course the changes in your portfolio as well. Now, I remember last conversation that we had, you were running very high cash levels because you were not happy with the valuations in the market. At that time, I think cash levels were as much as 15%, 15 to 16% in your funds. What now? Because you've had a time, you've had about 2 months of time correction and price correction in many, many stocks as well. So what is the cash level, and have you been buying through this correction?
Thank you for inviting me, Surabhi. Again, last time we spoke, I think we were on about 20% of cash in our flexi cap fund and even a tax saver fund. But since the past 2 months, like you said, there has been a time correction in many sectors, whereas a broader market correction in some of the sectors or stocks. But I don't think it is anywhere at a comfort zone where we can justify allocating more to some of these ideas. I mean, they have been coming down from the peaks, but the peaks also were extremely overvalued. So I think it's time will tell when we will get a right opportunity, but the cash accumulates till then.
Okay, it's as high as 20%, you're saying?
20%.
Okay. Raunak, if you were to deploy, which is the sector that even now offers you some comfort?
So private sector banks have been a very, very comfortable place to deploy capital. Whereas at the moment, the schemes are fully allocated in our view. About 20% of the fund is allocated towards the 4 top private sector banks. And within that, we find the valuations to be comfortable. And of course, the opportunity is well known. The kind of brand franchises these run is well known. The digitization of payments and everything in the financial ecosystem also helps these businesses. And the valuations have been attractive. But I don't think we can go overboard and allocate a much larger chunk of the fund. So I think we are comfortably allocated. And that's the area where I think there's the most value at the moment.
Okay. Again, one of the stocks you will never expect to find in the losers list for a year is Asian Paints. That's one of the stocks that is in danger of ending in the year in the red. Yeah. Paints have been, a great deal of competition, probably urban consumption slowing. But is it time to deploy primarily because the market dreads? Raunak?
It's hard to say. So it's a company that we admire a lot, have been tracking for a very long time. And this sector, if you see, did not have a very meaningful competition for a very long period of time. And the secular trend in terms of growth, which the sector has seen, has been phenomenal. And I don't think that sectoral growth is going to change. And I think that's the reason many new players are also being attracted and are deploying capital. But I think we have to wait and see how the competition shapes up, because it's not a game of just launching a product or launching a business, but also figuring out the distribution, figuring out the brand strategy, where it fits within the consumer or whether even the B2B kind of way that these companies will scale. You have to understand how the distribution pans out. So although it's interesting to see valuations coming off and this company which we can buy eventually, but I think it's too soon, I think, to comment on whether this company will do well or some other company. I think we'll study the sector for a while till the valuations cool off even more.
Raunak, you've always had a fair share of capital market plays in your flexi cap fund, right? From the likes of MCX has been there for a long time. Then you have stocks like Motilal Oswal. You have a depository, I think, right? I have the disclosures here.
Yes.
There's CDSL also in the portfolio. There's UTI Asset Management. So what is your thought process now? I mean, are you looking to take some profits? Because one argument is that for pure broking businesses, if the market remains sideways, typically volumes come down. Are you looking at more wealth management plays? And in asset management, you've only stuck with UTI. There are other entities as well. So just explain your thought process when it comes to capital markets. And you don't have a BSE in your portfolio, which also in between had a fantastic move in the last few months.
Yeah, BSE would have been a bit of a miss. The kind of growth that the company has shown and the kind of re-rating the stock has had, it was a miss in a way. But if you see the other capital market plays, we did okay in participating in CDSL, Motilal Oswal, and even MCX. Now, some of these stocks, when you look at them from a cyclical point of view, you realize that as the volumes have scaled, as the capital markets, even the participation of more retail players have come in, we have realized that as trading volumes cannot sustain. I mean, cyclically, most of these companies probably will be trading at a peak. And based on that, we saw the valuations not being comfortable at all. And we have been trimming them over the past few months across the schemes.
Yeah.
Okay.
You know, one more stock, since we're talking financials, let me talk about your largest holding, which is HDFC Bank. I mean, that's over 8% of the portfolio, right? And this one's really testing investors' patience. Obviously, you know, people like you are in it for the long haul. I mean, this is not a quick trade. But, you know, I'm sure it hurts at that level, 8%. But you're keeping the faith on large financials, large banks, any rethink? What's the thesis as we enter the new year?
I think hurting because the stock doesn't move is the feature of capital markets, not a bug. So whenever we see that a company we like and we have conviction about the business and the performance over a long period of time, I think you have to wait and watch how the numbers will pan out, especially coming from a merger with another large entity. And also we are facing some of the growth issues overall across GDP as well. I think over a period of time, the process, the performance of the team, the distribution network and digital adoption of some of these banks will show itself over a period of time. But meanwhile, we are okay to wait and we are okay to let the business perform and deliver the returns. I don't think we can judge too soon in terms of how the valuations will play out in this sector. But I think from a business point of view, some of these private sector banks, including HDFC, are solid businesses, and they actually deserve the growth that is coming to them.
Okay. Can you advise investors on what kind of fund they should think of at a time when the market seems to be in for a time or price correction? Should it be flexi cap? Should it be multi-asset? Actually, you have a dynamic asset allocation, right? Should it be those kinds of funds, or would you go even to some sectors which are ignored?
That's a very important question. I think what happens over a period of time, people generally have a asset allocation plan that they want to execute over a period of time. And when we see markets or equity or some asset class doing very well in the short run, that asset allocation gets really skewed. And I think every investor has to then go back to the drawing board and say that what their intended allocation was, what kind of risk appetite they can tolerate, because not all these valuations will remain steady. So what if there is a correction in an asset class which has done very, very well? Do they want to stomach that correction, or do they want to reallocate that money to other asset classes, which again is within their understanding of how the markets work or what the asset classes they understand or not? So I think asset allocation decisions have to be made when markets have. I think we have been recommending people that debt looks far more attractive in terms of allocating, because over there at least you will get money market returns plus something if you're investing in SDLs. At the same time, equity, the valuations are not letting up. In fact, that's the reason we are putting our money in cash, which actually earns us at least money market returns, and we are getting paid to wait to find good ideas to allocate money.
Fair point.
But I must say that Raunak is one fund that, if not asset allocation, it just does allow for diversification, because they've always been invested in large US technologies, right? So I need to ask you this. You're sitting on 20% cash. Aren't you thinking of any more new US ideas? For instance, I mean, I was reading somewhere the other day that Broadcom could be the new NVIDIA. Now, I haven't studied the company enough. I have no idea. But just curious, not looking to buy more in US equities, where traditionally, I mean, you've been the first movers out of an Indian asset manager.
Yes, Surabhi. So over a period of time, we have had 1/3 of the fund invested in global stocks, and we would love to go back to that kind of number in the future as well. However, I think since 2022, RBI has this limit of investing by AMCs in foreign stocks, and we cannot repatriate new funds. So we've been restricted to allocate new money over there. So far, we only reallocate whatever dividends that we earn from our existing investments, which is about 12.5% as of November fact sheet. But if you see some of these companies, it's very hard to find ideal replacements for a company like Alphabet, Meta, Microsoft, or even Amazon, because these companies have their own growth tailwinds for them, working for them, and the valuations are not too extreme as compared to the same growth rates we see in India. So I think it will be a very, very tough time to actually find a different stock which allows us to replace some of these giants in the portfolio. But I agree with you, the valuations in the global markets are far more comfortable compared to Indian markets.
Just a final quickie before we let you go. You also have some investments in power stocks, right? Power Grid is there, Coal India is there. Is there still any attraction in this sector, or again, price is a problem?
Sectorally, I think we don't think about it sectorally, but as businesses, if you look at the overall renewable boom that we are seeing in terms of capex happening in renewables, you will need some sort of a mechanism at a national level to manage the grid. And at the moment, Power Grid is the best possible idea where you can manage the entire grid as renewables keep coming up. And the whole idea behind Power Grid as a business is their cash flows are not dependent on which capacity comes up, but just to keep the grid running is how they make their money. And whereas a company like Coal India is a very different business where, again, it's a monopolistic PSU where nobody else has the kind of scale and productivity that they have in terms of generating cash from business by just providing coal to thermal power. And no matter how much we quickly want to move towards renewable, we are still beholden to thermal power as an important power source. So we cannot wish it away, at least for the short term. Maybe in the longer term, it will be more skewed towards renewables, and we have to then think about these cash flows disappearing. But that time is not very soon.
We'll leave it at that. Pleasure speaking with you, Raunak, and hope you and everyone else at Parag Parikh have a great 2025. Thank you for spending time with us.